Hello everyone, Joe Vitale, Vitale Wealth Management with this week's Gradient Investment Weekly Market Update. All the information is gathered as of the week of April 14th, 2025. Let's get into the review. It's been a wild ride for U.S. and international indexes last week, driven by fluctuating trade tensions that sparked significant intraday swings. The S&P 500 was up 5.73%, the NASDAQ 7.3%, and the Dow almost 5% for the week. Now, international developed markets was up 0.84%, while the emerging markets were up 3.82%. Bond markets were under pressure as the yield on the 10-year Treasury surged from around 4% at the start of the week to 4.747 by Friday, dragging the aggregate bond index down 2.54% for the week. Gold continues its upward momentum, rising for the fifth week in the past 6 weeks. The precious metal is now up 22% year to date. The S&P came close to entering bear market, falling as much as 19% from its highs before rebounding sharply to close the week 12.7% below February peak. Investors endured 2 weeks of the most intense market volatility in the last 5 years, and last week included one of the worst daily declines since March of 2020, followed by a powerful rebound, marking one of the biggest single-day gains since 2008. Which we say, stay the course, this happens, we're going to have a lot of volatility this year. On the economic front, investors gained fresh perspective on inflation. The CPI rose 2.4% in March, down from 2.8% in February, its lowest annual increase in 4 years. Economic upcoming releases. This week's key economic release will provide insight into consumer spending and industrial production. Both retail and sales data and industrial production and utilization is set to release actually tomorrow, April 16th. Let's talk about market outlook, retaliation, escalation, and negotiation. These have been the dominant themes capturing investor attention in recent weeks. Major U.S. and international markets experienced some of the most dramatic daily swings in decades as headlines shifted rapidly. The market's not trading on fundamentals right now. They're going, anytime President Trump opened his mouth, they're going one way or the other. So it's very volatile right now. Amid the noise, it's easy to overlook that in Q1 2025, earnings season has officially begun. Kicking things off, several major banks reported results last week, with the most beating expectations despite ongoing concerns about economic headwinds. Overall, the consensus estimates project S&P earnings growth of around 7.3% for the first quarter. If realized, this would mark the seventh straight quarter of year-over-year earnings growth. Throughout this earnings season, investors will be closely watched for commentary on how companies are navigating tariff-related uncertainty, particularly its impact on capital expenditures, supply chains, and guidance, which a lot of companies are not giving guidance because they don't know what's going to happen with the tariffs right now. On Friday, this week, U.S. markets will be closed in observance of Good Friday. So it's going to be kind of a short trade week this week. Already we got a little upward momentum. We'll see how that goes. Recent activity, there was trade activity in the G50 portfolio. The G50 sold off Alexandria Real Estate, which is ARE, Intrapublic Group, and American Express. But it did buy Broadcom, Allstate, and AT&T. So that's kind of how we rebalance now and again. Stocks in the news, JP Morgan, which is owned in the G50E, and the Core Select reported earnings beat on Friday. Shares were up 4.5% on the news. And CEO Jamie Dimon cautioned that the U.S. economy could face considerable turbulence amid tariffs and trade tensions. Also, Morgan Stanley, which is in the G50 and the Core Select portfolio, rose 1.9% after earnings came in better than expected. Investment banking revenues were up 8% for the quarter. So as we told you, a lot of earnings make the market move. And that's why we see a lot of that, because it creates confidence, people buy, market goes up. So all we tell you is we keep saying, remember when we had those huge swings? Just because there's tariff talk and everybody responds or the market responds negatively to that doesn't mean you jump out of the market. And what happened the next day? He said maybe we'll put a pause, and what happens? It goes way up. Markets are down right now probably 5 to 12% for the year from their highs. So 5 to 12%, we're down as much as 20%, came back quite a bit. But what does that tell us? Stay the course. We're going to have volatility this year. Once this all gets settled in, we're already getting billions of dollars in revenues from the tariffs right now. Yeah, they're going back and forth. It's going to be good long term, but it's going to create a little bit of pain right now. I hate the pain myself. I hate looking at my portfolio and seeing it down. We're all down a little bit. But you know what? Long term, I'm an optimist. I really believe this is going to be great. So stay the course. Look for buying opportunities. I think it's also a buying opportunity. If you've got some powder on the side, you don't need to do anything with it. Put it into something that could really grow. That's priced right now. So that's it. But anything we can help you with, please give us a call. 855-756-5700. Visit us at vitalewealth.com. God bless you. We look forward to seeing you again next week.